1 second here. Now we got a couple more people jumping in. All right, let's go ahead and get rolling. Hope you guys are all having a great night. Want to welcome you to our session where we're going to talk about utilizing options as a way to enhance your overall probability and specifically the effect of commissions on options. So I know most of you that are in the room. So those of you that are in the room, welcome. Good to have you all here. I'm glad you're here with us. Do me a favor, if you would. I always like to see in the chat box where our guests are coming from. So those of you that are here, I see that Nancy is in beautiful SoCal. So welcome aboard, Nancy. Glenn's in Phoenix. Glenn, I got to tell you, man, I love going to Phoenix. It's like it is genuinely like my jam. Vegas, Denver, Chicago. So we're coming in from pretty much all over the world. Greg, deep in the heart of Texas. Greg, you're in Austin, aren't you? If I'm not mistaken, are you? You're an Austinite, if I'm thinking properly. So, yep, that's what I thought. So, all right, well, we'll forgive you anyway. Austin's a good place to be. Lex has just joined us and popped in. So let me make Lex a co-host so that Lex can share his screen as he gets rolling. And real quick, what I wanted to do, and I'm just going to kind of give this as a way to get started. I thought that I would share my screen and just talk a little bit about kind of an intro about what our plan is to talk about this evening. And I know some of you are watching on YouTube, so if you've got questions, make sure that you share them. But what we're going to talk about this evening is minimizing the effect that commissions have on your options trading. And I will tell you, Corey and I have had the pleasure of working with Lex over the last couple of years on a couple of projects, and in doing so, I've had a really good opportunity to learn about Tradier and what they do. And some of you got to see Lex speak at our Trader Summit. How many of you got to see Lex speak at our Trader Summit? Anybody on here that went to our Trader Summit that got to have Lex come out and speak? He did one heck of a job, and the guy's like forgotten more about options than sometimes I think that I'll ever know, because he comes from a floor trading experience and floor trading background. And when he built, oh yeah, Nancy, hi Nancy, and when he built TradeHawk, which is the platform that things are built off of, he built it as an options trader in mind from the floor. Well, what's kind of unique about what we do is we try to bring the retail perspective to it. And what is it that retail traders need in order to be effective? And so I was thinking about this the other day, and I did a video on it. I'm not sure if any of you guys saw the video that I put out on Monday, but I was talking about taking spread trades that have very limited risk and very limited exposure, right? And so when I think about options, we talk about options plus. That's our more advanced option style of trading, and we talk about more advanced spread trading tactics. So when we think about our options plus and the spread trades that we look at, we are focusing on things like vertical credit spreads, iron condors. Well, the thing about those vertical credit spreads and those iron condors is that sometimes when you're doing those, for those of you that are unfamiliar with options, is that sometimes you can do those positions, and while they are very, very good positions from a probability standpoint, they're not always going to give you the best rate of return, because you might have to have such a wide spread that your credit is very small. The thing that I look at when I look at options is I look at this concept, right? So what do I see on this screen? Well, what I'm showing you here is I look at this, and I call the style of trading up here unidirectional trading, right? This is unidirectional trading. I make money when the market goes up. I make money when the market goes down. I make money when the market goes sideways. And when you have unidirectional trading, that is really when you're typically going to get your highest rate of return. But what do you sacrifice? Type in the chat box. When you're using unidirectional trading, which is where you're normally going to get that highest rate of return, what are you sacrificing in lieu of that high rate of return? Think about what we're sacrificing, right? Because I can only be right in one direction. So what I sacrifice, very good, Greg, I sacrifice probability, right? My probability gets a little bit lower when I'm unidirectionally trading. So how do I counteract that? Well, the way that I can counteract that is I can bidirectionally trade. And when I bidirectionally trade, when I'm trading bidirectionally, what I do is I essentially say, well, I can now make money in two directions. I can make money whether the market goes up or whether the market goes down. I can make money whether the market goes up or whether the market goes sideways. I can make money whether the market goes sideways or whether the market goes down, which is great, right? Well, I've now increased my probability a little bit, but I've lowered my rate of return because I can be right in more directions. And the more directions that I can be right, the more directions I can be right, the lower my rate of return is going to be, because one way is inevitably gonna sacrifice the other. So the last one that I would say is what I call multi-directional trading, right? And in multi-directional trading, you can make money up, down, or sideways, but you can only go up a certain amount, right? Or I can go up, down, or sideways, but I can only go down a certain amount. And this is where we start to look at things like vertical credit spreads, right? Vertical credit spreads look a lot like this, because we might say, okay, well, a stock's trading at 50. I'm going to sell a bull put spread at 45. Well, I can make money so long as it goes above 50, stays at 50, or drops down, but only down to 45. Well, the problem with this is that sometimes I have to make those spreads so wide or so far away from price that I wind up eating up a lot of my credit, and I have these tiny little credits. How many of you have ever, and just be totally transparent here, how many of you have ever not taken a trade due to the impact of the commissions because the credit you were receiving was not worth the trade? Who's ever had that happen? That the credit you were receiving was not worth you taking the trade. Anybody ever have that happen in your options trading? Sure, right? Lots of people have had that happen. So what if we can eliminate the effect of how commissions are going to impact our trade, right? What if we can eliminate the impact of commissions on those positions? So Lex, if you're here, if you want to turn your camera on, I'd love for you to kind of get in and get rolling. Lex Lutheringhausen is with Tradier, and we've worked a lot together. I'd love for you, if I don't know if you prepared a presentation to talk about this and kind of how it works. If you want to just show some kind of examples. Sure. I looked at a really interesting example on Monday that I did a YouTube video on. I'll throw the link in the chat box so everybody can see it. Okay. It was a $1 SPX spread, right? That $1 SPX spread versus a $3 SPX spread, where my short strike is the same, but my credit on the my percentage rate of return on the one was way better than on the 3, but my dollar amount credit was lower. And I think a lot of times people are saying, well, I've got to widen out that spread in order to make it make sense. But then when I widen out that spread, I widen out the exposure. So Lex, if you wouldn't mind just doing a quick intro on you and your background and what you do, and you've got a ton of knowledge to drop. So.
Oh, thank you. Thank you. Good to see you again, Chuck. Thanks for having me. Sorry for the little delay this afternoon. It always goes wrong when I have to be on time, right? So Google Chrome just acts up. So sorry for that. Yeah, so I come from the what I would call the market maker side of the business, right? So everything that you do as a retail trader and everything that you trade against, someone is on the other side of those markets. So that's what we did with our firm, way back I started in the late 80s, floor trader down there, moved off floor in 2000s, but we were the market makers. So I know you guys have heard that term, and kind of synonymously we call the market makers dealers nowadays. So we're the people who took the other side of the trade. So I did that for a long time. We ended up having a clearing firm and all that kind of good stuff. We ended up selling our business to Merrill Lynch at some point along the way. I stayed on the professional side for a little bit until I realized that the edge was no longer there for me as a professional. Okay. And what does that mean? We, forget about the compliance aspect of it. I won't even speak to that, but we started, the commissions for us to trade on exchanges was exorbitant. And that was about the time when we started seeing retail commissions start coming down, right? And all of a sudden, we see a retail shift that democratized access to the markets. Markets got tighter, And now all of a sudden retail was like, hey, I don't need to buy the bid and sell the offer. I can try to do something in between or even take an offer. Look at spiders, for instance. They're penny wide. That's a pick 'em market. No market maker ever wants to be on either side of that, right? In a pick 'em market, that's not their edge. So anyhow, we built this platform called TradeHawk, and we geared it toward the retail trader, is what we did. So that means that we took our knowledge from the pro space, the market maker space, and tried to push the workflow into this product so that, hopefully it would make sense to the retail trader. Now, there's some things that I'd say that we do a little differently from the retail, from the pro side. Okay. Is it right or wrong? No, not really. It's just how we grew up. So one example is, I think everyone in the retail world, when they fill in a buy leg, they're used to clicking on the offer, right? When you fill in a sell leg for a spread or for your trade, you click on the bid of something. Well, that's foreign to us. We would never do that. So we always had that reversed. TradeHawk, the one that you're going to see in a little bit, we've kind of made that configurable, I guess, so that you can do it either way you like. So there's some things like that are inherent to the pro side of the world.
Well, it's funny you mentioned that, because I was on another platform one time, and Corey can talk about this as well. We were on another platform one time, and because we're so used to selling a credit spread. Yep. Right? You sell to get into a credit spread because you're doing it for a net credit. And in all the retail platforms we'd ever use, we were selling to get into a credit spread. And then when somebody told us that we were doing it wrong and we had to buy the credit spread to get into the trade, it was just foreign to us. So you're right. Sure. There is this semantics between whether I'm buying or selling in those positions, and it's backwards. And what their response was to us is that, well, on the floor, this is what you do. You buy to get into a credit spread.
Right. So, yeah, I mean, we had a lot to learn about the retail side of the business, right? So this iteration, this is the second version. We call it internally TradeHawk 2.0. Quite frankly, it's TradeHawk, right? So it's a great product. It's especially good, for managing your workflow and managing your positions and your inventory. There's a lot of things in there in the platform that allow you to do that. I think, Chuck, where you probably want me to go a little bit is the cost and the pricing of the trade on this platform is tremendous, right? So we created a certain style and a certain model for active options traders. So I don't know where you want me to go with that, Chuck, or you want to ask?
Yeah, I think, I will tell you, and I'm positive what everybody out there is saying is like, okay, that's great. How can one do a commissions-free options trade, right? I think that's where everybody comes into, and I'm just going to tell you the story that every trader hears is the boogeyman about your order flow being sold. And when somebody sells order flow, you are getting absolutely hosed, right? When the reality is, every broker, for the most part, anyone that most of us that are traders are dealing with, is probably selling order flow. The difference is that they're selling order flow and charging commissions on top of what it is that you do. Right. And so, as I look at this, my big question was always, okay, am I getting the same fill here as I do here? Do I get the same fill here as I do here? And the reality is that when you're sending order flow essentially to the same houses, you're going to get basically the same fill. So I think it would be great if you could understand how that order flow sale process works and where people's orders go once they press the buy button in an options platform, in really almost any options platform.
Mm-hmm. Yep, sure. The other thing we might want to do too, Chuck, is let Joe LeDrew, who's from Tradier Brokerage on the brokerage side, in here. He's going to have some other comments, I think, along the way. But let me explain that a little bit. So there's a couple mechanisms of order flow, right? One of the mechanisms is the brokerage firm sends it directly to a specific market maker. So there's only a handful of market makers left. Citadel is one of them. Susquehanna is another. Wolverine, Group One. There's not very many of them left. I think so. A firm like Robinhood, let's say, and I'm not speaking bad of anyone here, Robinhood probably directs the order flow specifically. Then there's another mechanism, and it's the mechanism that we use at Tradier. It's a managed route. And what that means is that every time you hit the buy or sell button, it goes through the pipes and it gets to a consolidation route, and it goes to the best possible place, okay, to fill that order. That's what happens. We don't know where it goes. We don't know who fills it. Now we can do that on the back end after it fills, and we can run reports and see who traded the most with us and that sort of thing. But that's the end of it. So we have no real relationship with any specific market maker in the equation. Okay. So it's,
and that's the way, and that's probably the way, from what I've seen, that's the way most brokerage firms do it, right? They all send it to the best available spot.
they do. Yeah. Most of it's consolidated. Like I explained. Look at there's so many regulations and rules that require market making firms to provide best X with best execution. And there's reports and there's SEC mandates and there's all kinds of craziness that requires the market makers on the other side to do the right thing. Okay. That's what's caused this market community to be so, to flourish. Right. And it's really, in my opinion, brought down the price of retail trading, right? So it's really made a big difference. And don't think that people are, the market makers are playing with your orders. It doesn't work that way. I was on the other side of the business. I was a payer at one time in my life. We have no interest in any sort of gaming whatsoever. Our model is so much different than a retail traders. It's unbelievable. You would not believe our books. It is delta neutral. It is vega neutral. It is row neutral. There is no exposure either way with our inventory. And if we get exposure to any lengthy degree, we hedge it. So we are in a mechanism of trading as many times on our bid, trading as many times on our offer as we can in the market making community. So they don't care about your order flow in terms of, my God, I'm going to make 15 cents on this. That's not what they do. They put it into their inventory and manage that inventory. Right. It's amazing to see, by the way. I'm not sure you can even see that anymore because it's so electronic, but it's unbelievable to see the dispersion trading that goes on in that community.
And real quick, for those of you that are listening, if you have questions that you want Lex to answer, he's kind of pulling back the curtain a little bit about what happens behind the scenes when you push the buy button. Type it in the chat box. Lex can see the chat box, or if not, I'll make sure that I read the question to him so he gets it. Sure. So I think that's great. Yeah, and I think as you mentioned that, I like that you said that, right? The market maker has no interest in your $2.85 call option, right? The market maker's job is to stay delta neutral, theta neutral, vega neutral, right? Probably theta positive, I would guess more likely, on a bigger scale. And Cliff has a great question. He says, so where do these brokers make their money since it's so competitive anymore?
Yeah, so where a brokerage makes its money, and Chuck, you made a great reference. There are broker dealers, all broker dealers except for maybe one, so gets payment for order flow. Okay, so they get paid for that order flow. That some don't know where it goes or how they get it comes from the consolidator, right? So there's some mechanism there. Some BDs, like I guess I shouldn't say names. They charge a commission for your option and they get paid, so they're getting a double, right? Other ones who have come into the business and charge zero for commissions, they just get their payment. That's it. That's how they make their money. Don't forget, we're a banking business as well. So when there are cash balances at a broker dealer, they're allowed to charge an interest rate on cash balances. And that didn't mean much in the old days or in the near past because we didn't have high interest rates. Now that interest rates have been rising, that number becomes a significant number all of a sudden. It's something that you now pay attention to in terms of cash balance. Now, it has nothing to do with you should put all your money into trading. That's not my point. It's just another mechanism that BDs have to generate revenue. So it makes sense? Yeah. Yep. And I don't know if Joe, I don't want to cut Joe off here. He's on the broker dealer side, Chuck. So I don't want to speak out of school.
Yeah, Joe, feel free to jump in if you've got thoughts, because what I really wanted to do tonight was kind of expose how the brokerage system works, because I will say I recognize most of the names that are in the webinar tonight. Most of these people, we don't need to teach them what a call option is. They know what the hell they're talking about. Yep. What they really care about is what happens on the back end and how can I maximize my returns and get more efficient and more effective. So,
yep.
Sorry, I got dogs barking.
Hey, Joe, how are you?
Doing good, guys. Yeah, I mean, the biggest thing for us is, yes, we do get paid for order flow, but we make a lot of money off the debit and credit balances, like Lex was saying. Some of the other things I've worked with firms in the past where you did have direct market access, and you did route your order flow to an ARCA or to anybody specifically. You get add and remove, you get different things like that. But for the most part, everybody's doing it very similar. We have the smart order routing. We don't send it to one specific place. We try to get you the best price possible on each order. I mean, we're not looking to send it just to there because we get paid more. You know, that's not how we work. That's not our intent. I mean, we don't do that at all. So, I mean, that's the biggest thing where we come into our niche in the market is that, you know, we charge zero commission on the trades and we try to get you the best execution possible. So there's nobody behind the screen trying to take advantage of your order. We're not playing your order. We're not doing anything different.
Yeah.
Yeah. Sorry, Chuck.
So Lex, I think it would be great if you wouldn't mind. Do you mind maybe just pulling up and showing an example of some sort of a spread trade or something along those lines that shows, okay, what is the effect of that non-commission, if you will, on one of those more narrow spreads? So
yeah, let me do. I don't know how narrow this is. You want to share my screen and show this?
Yeah, feel free.
All right, so I was doing a little Netflix today, okay, and you were talking about an iron condor, right?
Yeah.
So what I did, by the way, this is a trade. So I've got this trade down here in my ticket, right? And you can see it's a condor, and we're not going to argue about long and short right now. All I can tell you is that it's a credit spread, right? The system automatically tells you that. I put this out here. You know what? I think I did 100 of these, for gosh sakes. Yeah, I did 100 of these. So if you do 100 of these and you're paying the commission, you're paying 100. You're paying. Let's say you have 65-cent commissions. You're paying 65 cents for each leg of that 100 lot, right? That's 400 contracts. That's 65 cents a pop. So you have, all of a sudden you bring up a part of a risk factor into your trading decision that shouldn't be there. So when we trained our traders in our proprietary business, one of the things that we really focused on was don't ever make a bad risk decision because of a commission. Okay. You can never do that. Right. So guess what? If I had that same group of traders today trading in the environment we're trading on, we don't have that problem anymore, because now I can do 4 legs in, out, close them, I can do 100 legs, and we don't have to worry about any part of that equation anymore. It's a significant part of your risk profile too, because if you're trying to make 30 cents, as you said, Chuck, on a really tight spider spread or something like that, or even a quarter, guess what? If you're doing that, you're going to get eaten up on at 65 cents a pop. You got to put that into your equation and figure out how that's going to affect your outcome, right?
Yeah, and I know lots of traders that do the 1-day SPX options expiration trades, right? They're doing 1 or 2 day SPX options for tiny credits where they've got a really high probability of success in those positions, and if they're wrong, they just roll it to the next day or to the next week. Yep. And so I think that's where that starts to add up. I'm not sure how often people look at their P&L and at the end of the year say, okay, how much money did I have this year in my options trading going to commissions? I think that's the difference.
Yeah. So just as an example, I talked to a gentleman the other day. We were doing a demo. And he said, let me read my commission statement to you. And what are we in? And we're in the middle of October, right? He said, okay, here's what it says. I've paid $15,780 in commissions this year. I go, what? I couldn't believe it. I mean, he's pretty active. I would imagine. I did a little math real quick and figured out he's a pretty big trader. But think about the difference. Someplace like us, that's going to cost you. You're going to be at $1,000 probably. And the only reason I say that it's $10 a month for us, no commissions. So that would be 10 months times 10 is $100. But don't forget, you have exchange fees and SEC and OCC fees. Those are all just pass-throughs, so that's going to add another, maybe to that guy, he's going to have $1,000 in commissions for the year plus the 100. So that's a significant difference. You save 14 grand, that's money in your pocket, right? That's money in your pocket that wouldn't be there normally. So the effective commissions is significant. It really is, especially if you're trading actively, right?
Yeah, I think that's really what I wanted to get across for everybody tonight is just how do I minimize that impact? So one of the things you mentioned, the $10. I know most of you that are on this webinar are Traders Army members. Anybody who's a Traders Army member, what's kind of cool is if you decide, hey, listen, I think I want to try Tradier. I want to put an account We're actually going to cover that from an educational company standpoint. Anybody who's a TradersArmy member, at our normal $149 a month membership, we're gonna cover your Tradier membership as well. So because I want to do a lot of stuff with Lex and help those guys out, and I think that it's a really nice relationship and kind of what it is they do. And so the TradeHawk platform they've been working on, it's a pretty cool platform. I've been using it a lot more recently, and it's a really good execution platform, professional level execution platform, as far as finding all the options and all the stuff that goes through there. And so Lex kind of has done a couple of webinars where he's walked me through how to use it. It's a little different than maybe what you've used in the past, but frankly, once you get to it, it's very intuitive in using it. So those of you that are members, we're going to pick that up for you.
Yeah, that's great. That's a great offer too, Chuck. The other thing I'd say is, our relationship with TradersArmy, it's been terrific. So, we're really excited about it. The other thing I'd offer is that, I'm happy to do one-on-one sessions to learn this product. We do it all the time. So you can schedule a time with me. We'll do it online, like a Zoom, just like this. I'll tape it for you so that you have it as a user manual of sorts, right? You can ask me any kind of questions you want about, anything in the platform. The only thing I can't do is give investment advice, so I won't do that. But I've been around the business for a long time, so I know a lot about trading and a lot about market structure. And we always get in conversations with people who do the demo. So it's a great resource, and happy to do small groups too. So whatever works, Chuck, for the community, I'm happy to do. So
yeah, Cliff has a great question. He says, "Is the $10 a month subscription cover multiple accounts, taxable IRAs, Roth, etc.?"
Yeah, so we typically charge $10 per account. So if you have multiple ones, it's $10 per. But for you guys, we're waiving that. So it's the $10 for all your accounts. So
yeah,
we're going to waive that fee.
So yeah, I just wanted everybody to kind of get a chance to see it. The platform itself, he's got the what if tab in the platform itself is essentially the options risk graph. So you can still do your risk graphing. Yep. You can still do your charting. The charts that are available are built in there. They're why did you pick LSU colors?
Well, that's funny you said that. Someone told me this was Eastern Carolina, and I'm like, wait, this is LSU colors, man.
No, that's LSU.
I'm from New Orleans. This is Mardi Gras stuff here.
That is LSU colors. So,
I agree. So yeah, I made these today. So that's a point here is that you can make these anything you want, and it can be a light background, dark background is all
LA Lakers colors. That Cliff's actually probably right. It's probably the Lakers.
I'm from Chicago land. I can't be an LA Laker fan, man.
So yeah, the charting platform is continuing to expand and grow as they build it. I've actually worked with Lex, and him and his developers have really listened to what we've had to say from a charting platform to make it more intuitive and make it more, make it an up. Because on the floor, you didn't use charts on the floor, right? Talk a little bit about that if you wouldn't mind.
No, yeah. So no, we have zero skill at technical analysis. I'd say it straight out. Now I learned it over the years. I would also say I'm not very good at it. Very average at best. So we didn't use this at all, because remember my model was I wanted to be in a trading environment nonstop. All we did was trade and hedge. So we were very neutral. So we didn't have to know which way the stock was going. We didn't care. It didn't matter to us. All we needed to know is that, if I bought my bid and sold my offer and hedged, I would, at some point gain that edge. Right. We had a model that that told us the theoretical value of everything. It was based on implied volatility studies, and very, very analytical and very high mathematical. We didn't have to understand how it worked. We just knew it was very good. So we made our decisions based on edge. So every trade had an edge to us, and we try to accumulate as much edge as we can. And I've always made the analogy, for us back in the day, it was like picking up nickels and dimes in front of the steamroller. That's what it was. It was edge. Guess what? If you're fast enough and you're good enough, you pick them up. Occasionally you get your hand run over or your foot run over when you're not paying attention, you're not doing the right thing. And we always try to avoid that. But it was definitely that kind of concept, right? So we didn't use this for directional things.
Right. Yeah. So you were primarily looking at the Greeks. And so when you pull up, if you would pull up the trading tab, and just show everybody, where you can kind of see in an options chain what the Greeks are and how all that stuff looks.
Yeah. So
just so people can kind of get a quick view of what it looks like.
Yeah, I'm gonna put a different one on here. Let me go. I took all that out for myself. Let me see if I have it here. Okay. Let me get one for you that has it. I'm Greeks. All right. A lot of stuff. So we add Greeks to this to the equation. So and a point here is that this is all configurable. You can see I'm moving through this pretty quickly. So you can remove columns, you can move them left, move them right. If I don't know anyone who pays attention to row, even though interest rates are rising. Okay. Someday, Chuck, have me do a talk about row, because I got killed on a row trade once. So we'll do that another time.
Speaking, you're preaching to the converted, brother. I remember buying a put option because I thought, oh wait, we're cutting interest rates. I got volatility hammered and row hammered because I thought, oh, a put option's the way to go. Yep. Delta was good, everything else was bad.
Yeah, and I know. So yeah, so here it's all here in front of you. And again, you can configure your options chain any way you want. Okay. If you saw mine, here's my original one here. Let's see what I got here. So my original one is very, very basic, right? So, and again, you can just flip between these. I don't have much in here. If you need a delta, throw it in. I have one with a delta in it, right? I've got another one with just bid, ask, and position. That's my favorite one, right? You can add deltas and Greeks to your portfolio page too. There's even beta calculation, so that if you want to get normalized Greeks, you can do that as well. So the platform does do that. And trading's seamless. I got to tell you, this Netflix Gigantor Iron Condor. If I wanted to close this thing, I click one button. It's the ticket button. It fills in the closing legs, gives you a price. You decide, what you're doing, and you hit send. That's it. You can always look at risk graphs right before you send them. It shows you max profit, max loss everywhere. So it's super easy to use. And Chuck, you made a good point. Don't forget, if you've been using a system for 10 years, it's like riding a bike. It's going to take a little bit to get used to it. There's a different workflow, but if you work with this platform for I always say, if you're good at working with it, 3 or 4 or 5 days, you're an expert. And I'll tell you, I had a guy once who I did a demo with. I was worried that he couldn't spell the word call because he was so terrible at this at technology. Within 5 days, he had me back on a demo, and he was moving. He goes, Lex, by the way, if I do this and I do this butterfly, and he's flipping around on TradeHawk, I was like, holy cow, have you gotten good at this? He goes, yeah, it just takes a little practice. You get good at it. It's easy. So, don't get discouraged. It's new, it's different. But once you get it, as Chuck said, unbelievable. You'll be very fast, very efficient on it.
Yeah, here's what my plan, me personally, my plan is to use this for a lot more of my very small credit spread trades, where I'm looking to capture small, maybe non-directional movement, but small credits with larger contract size, just to be able to do that on a regular basis. Those 1 day SPX options, those couple of day USO options, those couple of super high liquidity, super high volume, high open interest stuff that's got tight spreads where I can get that kind of a return. So I think that's the benefit of a platform like this. So
yep, for sure. Yeah. I mean, there's a lot here. So I don't know if I'm not going to go through everything, obviously, but there's volatility workshops. This is heady. So if you're into implied volatility, this is a great spot. So there's dealer exposure, which is that's the talk I did in California with you guys. Volatility skews. There's a lot of things here. Great IV rank comparisons. You can create strategies and track your strategies so that when you do an iron condor and you roll the call legs down, let's say, or you roll them out, you can keep track of everything. And the system will keep a running total of your position cost, your cost basis, your P&L, closed, open. It'll keep it forever. You can export it to Excel if you want. Really a great journaling tool, this strategy tracker. I use it a lot.
Yeah. When you went in and talked about Charm and how that worked for an option at our trade summit, it was like there was a lot in there. So
yeah. It's look at it's one of those things where you don't have to know how the stoplight works really. You just have to know what you have when it's turned green, red, and yellow. What you do at the brake pedal, right?
Yeah.
So it's like Charm's like that as well. Charm and Vana, those are the big boy terms. They're second derivative Greeks. No one has to know how they work. You just have to know what it means and how it can affect the marketplace, right? So that's important stuff.
Hey, great question. Mac or PC?
Available on both. Yep, works on
Okay.
both. Not a
Yeah, it
problem.
says, is it better on a Mac or a PC? I would say it's better on a PC because I'm not a Mac guy, but then Corey would think I'm nuts because Corey's only a Mac guy. So
yeah, no, I don't know. I think Mac has given us a couple issues with keys and that sort of thing. But yeah, I think we solved it finally. I think it works great on both. I think it looks better on a Mac because I think the Mac graphics are better.
right.
I mean, how can you look better than this LSU color, man?
Well, I
This is
think you
pretty
can.
good.
Hey, question. Great question about Canadians. Any chance? Any plans to offer Tradier to Canadians?
Joe, you want to take that one? Is Joe still here?
Yeah, Joe's still here. Hope his dogs feel better. Your dog back there. What kind of dog you got back there, Lex?
Yeah, I mean, unfortunately, it's not us that have any control over Canadians. It's U.S. law that, with UK and Canada, they basically have it where we don't take their customers, they don't take ours. So we 100% would offer them to Canada. We'd have to have an office in Canada, kind of like TD does. That would be the only way we'd be able to do that.
Yeah.
TD does stand for Toronto Dominion. I mean, I'm just going to throw that out there.
It does. You're right.
People tend to forget that.
Yep, and that's the reason they got an office there, so they can facilitate Canadian customers. We can.
Yeah. I think, Joe, it's something like for every customer you have to have so many employees in Canada or some goofy equation like that. So it makes it prohibitive to business.
As South Park once said, blame Canada. I'm just kidding. I love you, Taras. Is a third-party custodian required for IRA accounts?
I'm tossing that to Joe too. I don't even know the answer to that one.
I believe all IRA accounts are clearing from Apex Clearing is going to be the custodian. So I don't believe we even have any that have a third party. All of them are held with our custodian, which is Apex Clearing. So
yeah, I have an IRA account with them, Nancy, and it was super easy, barely an inconvenience. I have a small IRA account with them, and I was able to move it over pretty easily.
Yeah, we don't have the ability to use outside third parties for custodians at this time.
Okay. Cool. Well, I mean, that's kind of what I wanted to go over and just share with people. I will say this. If you are a TradersArmy member and you think you'd like to open an account with Tradier, what Corey and I would ask you to do is to send us a message. Send it to support@tradersarmy.com, and we will forward it over to Lex and Joe. If you want to learn more. Somebody earlier in the chat asked what makes Tradier different from anybody else out there. I think somebody mentioned Webull or some of the others. I think the big difference is Lex and guys like Lex and people like Joe and people like Pete and people that I have had the chance to rub elbows with and know. They're damn smart people, frankly. And I think that is really the big difference. It's the ability for somebody to kind of get on with you, do a Zoom, walk you through it, and help you. Who's really got a lot of background in it.
Yeah, no, thanks for that, Chuck. I appreciate that. I would give some credit to Joe and his team in Charlotte. That's where our brokerage is. They're terrific. And I always say this when people ask me, if you pick up the phone and call them, you're going to get a human being who answers the phone in about 3 rings. So it's amazing. It's amazing. So really, really well done.
Is there a minimum account balance, Joe?
The only thing we look for is to have a margin account. You need 2,000. So I mean, other than that, whatever you have, it's your risk. Whatever you're going to be able to use. Big thing is if we're going to be doing spreads, you're going to need a margin account. So you're going to need $2,000. I mean, that if you want to call that a minimum, that would be what it is.
Yeah, I mean, my thought is if you're going to open an options account, throw $5 or $10 grand in there at least.
Exactly.
Don't mess around with a $2,500 options account because then you can't roll, you can't adjust. So if you're going to do something, I would say throw a minimum of 5. My personal opinion is throw 10 grand in an account so that you can at least roll and adjust. You might only use 2 grand or 3 grand or whatever, but if you got 10 grand in there, then you can make adjustments to your options trades. And if you don't know how to make adjustments to your options trades, that's why you call us. Corey's really, really good at making sure that people, Corey and I are good about knowing how to do that. Yeah. Futures, question on futures trading.
Yeah. So Joe, I'll take this real quick unless you want to add to it. So on the roadmap for sure, we're working on getting crypto out hopefully by year's end. Portfolio margin happening shortly thereafter. Futures is the next part of that. The estimates lately are mid 2023, so second quarter.
Beautiful.
So, Joe, I don't know if you have any more to add to that.
No, that's why I typed in it. We hope to offer it sometime next year. I've done futures on and off for the last 20 years. So, I mean, they're again, futures are nice because you have less capital when you're doing the e-mini, doing things like that. So, again, each thing is its own animal. Futures, the hard part with that is there's so much more risk involved.
Listen, Joe, here's the deal. If you've got any pull, when you do futures, make the micros lower commission. Please. Make the micros. I understand futures have to have commission, but don't make the micros the same as the minis. Please. I think everybody would appreciate that.
That sounds like a plan.
That drives me crap crazy when I got these huge margins on one not to be named broker, and then I got to pay the same amount on a micro as I do on a regular. Get the heck out of here.
Yeah.
All right. So everybody, thank you for joining us tonight. I appreciate it. Lex, Joe, thanks for coming in. Everybody who came this evening, I appreciate you all coming tonight. I hope you learned something, found something interesting. If you think you might want to take advantage and open up an account with Tradier, we're working on actually putting a landing page on our site. It's not there yet. So just shoot me an email that says, hey, Chuck, I'd like to connect with Lex, and I will forward that over. Just send it to support@tradersarmy.com. I wouldn't put somebody in front of you if I didn't trust them. Just remember that.
Thank you for that. Appreciate it. You guys.
All right, everybody.